morning, Ed Mines. Good morning. Lyndon, LJS. Oh, yeah. Roland Park. Yeah, that's right. Tall Tex. Good to see you. Good to see everybody. Again, yesterday, markets coming out, just a little bit of positive news brings a squeeze. We had a huge squeeze on a variety of different stocks, including that good old fashioned Beyond Meat that we absolutely love so well. Ugh. Another 46% today. Yeah. Okay. Well, anyway, some dreams will just take a little bit longer, everybody. Happy birthday to Connie's husband, 75. Very cool. Bitcoin pulling back to 109. Gold moving down to 42.33. And silver, big pullback, 5%. So now the big question is, what's the macro environment looking like? What is it that's driving this type of action? We had a nice move yesterday, and now we're flat, and it sets us up, of course, for what happens at the opening bell and whether or not we go this way or that way to start the day. 670 is going to be a very key line in the sand to start the morning. And on the SPX, a couple of quick levels that we want to take a short look at real quick as we move into the morning. How's about looking at SPX trading view? SPX. Key lines today in the sand are going to be 67.66 to the upside, 67.55 to the upside, 67.48, 67.32, 67.24, and 67.09. Again, focusing once again on deviation bands, looking for reversals today. Everything is in play, particularly names like Micron and NVIDIA and Tesla reporting ahead of earnings. Earnings will be tomorrow for Tesla, and I will be here after the bell to cover that. But once again, this is why we do this show. We get in here and we talk about exit liquidity, the fact that at 9:30 there can be some pretty wild moves. Now, typically I want to wait around a good 15 minutes before we do anything significant, but I'm looking for some selling to start the day. I'm looking for some opportunity to take advantage of any continued reversals. Basically, in this environment, people taking gains from yesterday and in the overnight, and then looking for a resurgence of momentum, which has been very strong. Yesterday, last 2 days of the S&P 500, actually, from Friday into Tuesday, we had the strongest two-day run since June. Why is that? Well, that is just the way this market has been behaving for the better part of the last week. We had that regional banking news. We had the concerns about what's happening in private credit. That's not going away. But as you can see, the way that this chart has laid out over the last week, it is a lot of violent moves to the downside, followed by moves to the upside, and funds using those upward moves to sell back into strength. That's why you got to be a little bit cautious heading into today, because we're basically right back where we started on the 10th, but nothing has significantly changed other than speculation around what's happening between the United States and China. All right, so momentum is squarely strong at the moment. And again, when we do this, this is a poor man's version of the metric that we utilize. We use a little bit more of an advanced metric that analyzes each individual sector and the amount of capital flowing in and flowing out. Forgive me, my dogs are going to start barking in a moment. That said, as we dig into this, there's still significant selling pressure at the top of the Russell 2000, but there has been a significant decline in selling pressure in the S&P 500, and that has led to this positive figure. You're seeing strength in names like Robinhood, Moderna, ALB, Albemarle, which has popped back up on this list time and time again. The weakness that has persisted, if any, at this point, even though there was bidding, was in the RCLs and the MGMs, the casino stocks and the Caribbean cruise line stocks, which were up on the day but had been under pressure for the better part of the last week. So As we dig into this, positive momentum conditions, looking for a continuation. We're not too far from all-time highs, which is just a reminder that liquidity is what is driving so much in this market. You're just beginning to suspect that I don't like Beyond Meat. I have described it as all that is wrong with capital markets. Earnings recap, GM beat, raised full-year profit forecast. That is bullish for Ford, which we talked about yesterday. Ford getting another little pop this morning. Raising their profit forecast. Why it matters again. Strong autos and tariff relief optimism. EV demand is still lagging, though. Coca-Cola topping expectations as well. Revenue beat, reaffirming that guidance for the full year. Why that matters? Because pricing power remains intact for a company like Coca-Cola, and volumes are soft, but the margins are stable. Lockheed Martin, again, looking a lot better as well. Why does that matter? Defense matters in the macro insulated environment. Budget tailwinds are continuing. And once again, this stuff is not going anywhere. One moment so I can yell at my dogs. Someone's coming to look at the hole in the ceiling. Okay, let's try again. This is what makes doing everything at home so exciting. Oh my gosh. Backlogs at 179 billion, the dividend increasing by 5%. I can hear my dogs, Ed. I have one thing in my ear right here, right here. The other ear is just dogs barking, and these dogs bark very, very loud. It's a lot. It's a lot. 3M topping expectations again, EPS up 10%, raising their guide. Industrial strength, margin expansion despite the macro drag. FinData resilience on Equifax, improving fundamentals in the soft economy. We saw a lot of insider buying on Equifax recently as well. Overall, the market takeaway, this has been so good so far. It's a lot of cursing, Don. It's a lot of cursing. All right. So the broad beat and raise trend is improving sentiment. We're getting through this earnings season without any deep surprises. Consumer names are driving the leadership as well. Forgive me. I will go back to the screen. There we go. Good job. All right. And again, sector rotation, auto and defense is outperforming, and energy is again lagging. Again, lagging. All right. Key things here. This was out of yesterday's story, but again, it's just a reminder that the U.S.-China trade is going to be the core macro element at the start of the day. They're all petting the dogs now. That's good to know. Dogs have calmed down. Asian equities rallied on U.S. trade tensions eased, and Japan's new leadership signaled new stimulus. So again, paying very close attention to what is going on in Chinese stocks, particularly names like Alibaba. Alibaba had a very solid run in recent months, coming back above this key moving average. Alibaba is actually something that I like. I will probably go long Alibaba now that we are moving back above that 8 and that 20-day moving average. Looking for a little bit of a bounce lag move. If we start to see positive focus on the trade relationship between the U.S., the headline driven environment, this can get back to 180 very, very quickly. So BABA is definitely on the list, as if XFI, the EWJ, JD, and the SPY. Recent trade tensions, again, removed that key risk premium. And Japanese stimulus is supporting exporters and industrials. We'll talk a little bit about some of those names like Honda and Toyota Motor Company as well today. These are relatively cheap stocks relative to other companies that are in the automotive space internationally. But again, continue to watch the ADRs, continue to watch Alibaba, because it is a very good signal of what is happening with overall Chinese stocks, and of course what's happening with their tech companies. On top of that, oil just continues to be under pressure, and this is really a matter of the ongoing trend. We're up on the day 1.2%, but again, the key concern overnight was the idea that inventories had risen and that Chinese demand is weakened. I'm expecting more renewal of that trend to the downside, just looking at some short covering at the moment. Expectations, again, we talked about this yesterday, that Brent potentially finding itself somewhere in that $55 per barrel range, and WTI, because it has not been trading at a premium for years against Brent, though it probably should, will probably settle into that 52, 53 range. The big question is whether or not the Trump administration will aim to set a floor for U.S. production. That is possible by potentially aiming to purchase fuel, WTI crude, for the Strategic Petroleum Reserve. Paying very close attention to that headline if it does come. All right, finally, this is a relatively rich one. I love these types of statements that are made by other central banks around the globe. The Bank of England has warned of subprime-like risks in U.S. private credit markets, funding costs, and credit spreads widening across sectors. Now, once again, we knew this a week and a half ago, actually 2 weeks ago, when KKR and a number of regional banks started getting their teeth kicked in. Here's the thing. It's very rich when the Bank of England is warning the U.S. markets about anything, given the fact that the English banking system nearly sank the entire financial system globally 3 years ago. Once again, the mismanagement of their credit and their situation with their bonds created the gilt crisis, which led to the bottom of the liquidity cycle, which helped also influence and impact our own regional banking crisis just 3 to 4 months later. The problem, unfortunately, and what this really showcases, is exactly what I've talked about with the Bureau for International Settlements. Now, I'm not going to ask you to, or Bank for International Settlements. The BIS is the central bank of central banks. And in April, they wrote a report basically stating that the Federal Reserve cannot do anything anymore without being concerned about what's happening in other countries, like England, like Japan, like anywhere in Europe. Pick one. The reality is that the central banks are more interconnected than ever because of this, because of hedge funds, because of private equity, because of the international shadow banking system that is now the underpinning of the financial system. And what is happening now, which is very interesting, is that they're all now starting to point fingers at one another. This can lead to headline risk. This can lead to volatility. This is the type of thing that, if you go back to the crisis in 2023 when Silicon Valley Bank collapsed, what occurred was there was a social panic, and it started on the back of, does this bank have enough capital in order to basically, if I need to pull my money out, can I? And it started a social media banking run. The chatter around private credit, particularly right now, is exponential. It is at a level that is 2008 level around subprime risk. It coincides with the Great Depression anniversary. It coincides with Sorkin's new book. Everyone, everywhere is now an expert on financial crisis. That leads to volatility. That leads to headline risk. That leads to somebody from Bank of America coming out and saying, oh, yeah, this underlying auto issue is bad for this type of bank. And then everybody starts digging into a different bank, which then starts a run on this other bank. That's the type of stuff that happened back in March of 2023, but it wasn't around private credit. It was around residential, commercial real estate. Right? So it's very important to be paying attention to this, understand what's going on, but recognize that there is definitely shifts that are transpiring. And now it may get more noisy and more fractured as a result of these types of policy issues. Again, liquidity tightening could hit the regional banks first, as it usually does. High yield and private credit funds are highly vulnerable to redemptions, and any credit contagion could trigger risk-off shifts in equities. We saw that happen in 2022. We saw it happen in 2023. We saw it happen last year with the Nikkei drop, and that's where NVIDIA fell 33% in about a month and a half, less than that, 3 weeks. So pay attention to all of this, because this is where, particularly in the regional bank private credit repo markets, this is where all the leverage unwinds. It can unwind very quickly. And of course, we're watching the FNGD. Derunna, what's going on here? Get out of my chair. What are you doing? Can I kick you out of this? What are you doing? Somebody's in my chair. Get out of there. Okay, well, we got agreement. There we go. Get out of here. People editing things. I think this is Alcoa. As I noted, I talked a little bit about this morning. There is a massive move today in Cleveland Cliffs, right? Pull back about 4.5%, but the stock was up 20% yesterday because they said that they were going to start looking for rare earth minerals. Not actually doing anything about it, but just looking for it. So here's your new prediction. AI in earnings reports is now going to be replaced by rare earths. Anyone who is mentioning rare earth materials during their earnings report will have a 15 to 20% pop simply by, and it's even better if you incorporate AI into it. You're using AI in order to find rare earths. I think that everyone would be a perfect way to move through this. Well, basically, Alcoa is just moving through pure strength, through very strong momentum. But once again, what do? Do they have, the capacity to engage in this? Do they have the ability to help out? Do they have the knowledge in any way? Well, the reality is they mine and they refine and they produce aluminum, and it's bauxite and aluminum segments, and they have refining capacity. Could they become a refiner of rare earths? Why not? Why not? It's just, well, I laugh at it because it's common sense, but it's also just like it's just the way our markets work. Like, this is a national security issue, no doubt about it. And people are playing a game. There is a game here. There is a game to align with political leadership. There is a game to basically play what the hot trend is. There is a game to make yourself continually relevant. It's all marketing. It's all marketing. So, yeah. There you go. If Beyond Meat becomes a rare earth metal company and Beyond Earth, we're pivoting. Who has a bunch of people did that? Kodak was like, well, yeah, we're an AI company now. Strategy was like, we're not going to do documentation. We're just going to buy Bitcoin. And why couldn't a company just say, hey, we got a pile of money. We're going to start buying bauxite? They aren't edible. But we'll figure it out. AA continuing with its strength, 8-day moving average. Again, I actually like Alcoa, not so much as a stock trade, or forgive me, a options trade. I prefer it as a stock trade up to aiming for that around that 46. This is more of a bounce type momentum trade where you're looking to get back toward your 52-week high and just that continuation. So a nice move here, $8 on Alcoa, buying the stock at the current level, setting a stop back at around 35. I would go back to the 50-day moving average, 33. So 25% stop, but actually looking for continuation in this environment of ongoing dollar weakness. In Alcoa, Don's going to start eating the yellow cake. That's not good. AMT, American Tower. Wake up. Wake up. Absolutely beaten down name in the specialty REIT space. Interest rates. Interest rate cuts should be helping this. But once again, in this environment, this is one of those names that is heavily tied to private real estate, private equity, these types of loans. Everything is under a lot of pressure. That said, buying some of these shares and setting a very tight stop right at that green line at 190 level and looking to see if we can get above that key resistance level here on the 50-day. A push above that 50-day would be bullish. Once again, the stabilization of private real estate alternatives like this. Remember, this is considered in a public alternatives real estate real estate investment trust, which is structured a little bit differently than a traditional equity. It is based on units. It is based on tax efficiency. It is alternative, but trading as a public vehicle. A lot of these things typically will just trade not on the public markets, but will be structured in the private markets instead. On the downside, app loving, McLovin, whatever. Seeing if it can hold that. It's going to have to stay. It's going to have to drop under the 50. So 560 for a short, and then looking back higher, you push back above that 6. There's a lot of range here. This is a no man's land stock. Yikes. No. I hate this company. ChargePoint was one of the best momentum stocks in the world to trade when we first started trading momentum around these names. ChargePoint has been reverse split multiple times. It is the, look at this thing. This is as spacky as you can spack. This has been reverse split so many times, ChargePoint, to the point that I don't know how it's still in business. Enterprise value is 387 million, market cap 260 with income of negative 265, and yet they're not bankrupt. And you wonder why their short float is 15%. Well, the reality is this thing squeezes a lot above those 820-day moving average. ChargePoint, I'm going to keep trying to short this thing. And again, I'm going to do it on the cheap, specifically looking at around an $11 put or a $12 put out into November and looking for continued weakness if this consumer cyclicals continue to be weak. And CoreWeave, which you got to be a little careful here because if momentum returns back to this, it moves up pretty quickly, $20, $30 moves. Your key line in the sand is 123. If we move under it, that's where you short, and you keep a very tight stop back at some of these key moving averages. Choose your weapon, but I would prefer if you stayed around the 125 level out 2 weeks, only if we drop under that 125 level. Tuesday's watch list, Kohl's, and I keep telling you, there's something about this stock that I really like. And it has nothing to do with the fact that it's got a 30% short float. It's entrenched in debt. And yet, for some reason, it's got a very high F score, meaning that the company is trying to actually solve its problems. If this liquidity cycle picks up and Kohl's can continue to maintain any level of momentum, this is the type of stock that can turn into the Carvana story. And I say it with low probability, but Carvana went from like 6 to 360. This could go to 30. Why? They're paying down the debt, they're refinancing, they're focusing. A lot of good things have to happen. But the point is, if you just stay on the positive side of these moving averages, and you don't hold it if it breaks under, right, 50-day, there's opportunity here. It's going to require an improvement in liquidity. You can see the positive move on the MACD. This looks like it's going to wake back up. And I think that he makes another move back up to the $19-20 level. It's cheap to trade. And again, if this squeezes, and it can and it will, 30% short float, you get up here pretty quick. Coles, it's contrarian, but I like it. GM, big pop today. There's going to be some rollover on this. I think it's very critical to pay very close attention today to these key lines. What will happen if you get into the it's already starting. Pay very close attention to the 820 adjusted on this daily chart, 3-minute chart. And if that 8-minute starts to dive under that 20, look for a reversal back, looking for people to be selling the news into the market open. This is positive for Ford. Obviously, Ford is reporting earnings. Ford should be in play today. Ford could get back to 23.35, 12.40. They're reporting earnings, I believe, Thursday. So this is good news. It's good news for GM because, again, GM has been cheap for a while. It's just needed to get some level of momentum back to it. It's done very well from when it hit the F-score, gram score back in July. It was at $50 per share. And again, looking to, after today settles, may probably look to sell back down here on spreads on General Motors. And finally, you got INSW. What do you do? International Seaways. Now that's exciting. That is midstream oil and gas, so the shippers. All right. Question is there anything to actually do with a name like this? And you have to look at the options chain and whether or not there's actually anything there. Sometimes there is, sometimes there is not, but what is going on? Oh, okay. It is a pretty wide spread for December, unfortunately. So probably won't look there, but if INSW is popping up, that means I'm going to look at TK. TK is a little easier to trade, a little cheaper to trade, and I like that positive move here. So I like TK instead. Buying at this level, setting a stop back at 820, looking for a move hopefully back up to 9. All right. Don does not like Ford. Okay. Much better run company than General Motors, but what do I know? Man, it's getting violent in this room this morning. All right. That sounds about right. All right, 9:15. We got a couple minutes left. Again, I just continue to put your cyber truck from a Ford dealership. All right. All right. So 5 minutes left. I have a Ford call spread on as well. I have a lot of stuff still in the docket that I have to clear. I don't know what is going on with this screen share, so let me stop it for a second. Good grief. Between Zoom and some of this other stuff today, I just can't deal with it. Let me look and see what I still have on. I got a lot going on here. Oh, Schwab's going to work eventually. One day. Thinkorswim's just updating into perpetuity. It'll be done by the time lunch comes around. It's going to be cool. Yep, Schwab's frozen. It's going great. It's going great. All right. Seriously. Wow. Wow. All right. What am I holding? Still in BGC from the show last week. That's barely moved. Twist I added from our Friday. Still hasn't moved much. I'm in an AAL position, American Airlines. That's going to pay for Friday. FDP. Talked about it yesterday. Told you. Fresh Del Monte produce. Waking up. They're buying the food. They're buying the food. Still opportunity on that. That would be the $35 call for 1121. That currently is traded yesterday at 172. So buying 35, selling the 40, and looking for, I'd like to see a squeeze, pun intended, on Del Monte produce. Coles, I'm in the 15 for 1031. Still in a riot position, still in a SoFi position spread, and I'm still long palladium, even though PALL is now really getting beaten up. Look at that. Really beaten up. That's just momentum. So it is it's a wild time. It's a wild time. This computer has all of the RAM. This thing is a beast computer. No, it's not that. I think it's operator error. Do we not understand that? It's operator error. Thanks, Don. I appreciate it. Okay. 9:17. we're just running the clock out at this point, aren't we? All right. I would continue to argue and continue to focus on a few major things. One, remember, you're in the middle of a blackout period, so there's not going to be a lot of insider buying in any capacity anywhere right now. We're going to start to see insider buying pick up over the next couple of days, largely in names that are linked to what has just reported, the companies that have just reported. As I've noted, when we look at insider buying and selling, we're looking for companies that have significant amounts of buying from CEO and CFOs. The biggest insider buys in the last 10 days is BRT Apartments, which is waking up. Again, focusing on interest rate cuts. This is a REIT. This was beaten up because of the alternative kind of bloodbath that we saw in recent days. Very good long-term position here. 6% yield, very capital efficient. And we saw a lot of buying in HEICO, HEI, which is, again, in the industrial and aerospace environment. On the other side of that, the stuff that has the biggest insider buy has actually been one of the biggest momentum stocks of the last couple of days and has sold off a little bit resultantly. This is Highcroft. This is Eric Sprott. Eric Sprott bought this at $6.50. It is a gold stock as well. Look, there's going to be a lot of noise in this space over the next couple of days. And I want to remind you that if you are day trading, the GDX and volatility is picking up, you're going to be looking for wide spreads, wide moves in this volume weighted average price. Volume weighted average price is that blue line. Look at how wide the deviation bands are right now on the GDX, about $5. That typically doesn't happen that often. This usually trades in a $3, sometimes even $2 of price movement. But when we start to see a blowout in these bands, there can be significant moves, particularly on days like a Friday. If you're trading options around the GDX, if you're trading options around the SIL, or even if you went up into the leverage, the GDXU, these are very liquid products that are traded on the daily. So if we get into oversold territory on the GDX or the GDXU, let's say we hit 171 today, there is a very reasonable possibility that you get back to 192 simply because of the way that these things are structured. Try to make sure that you're keeping a tight stop. Try to ensure that you are utilizing the reversion trades, if you're focusing on them, by utilizing in the money or at the money calls, not speculating to the upside. And as we'll do today in our next NVIDIA session that is set for 2 o'clock, we're going to be, one, trading reversions live, but also we're going to be continuing to look for the names that have those significant momentum qualities, companies like Micron, that have set up for this week for even wilder swings as well. This is a unique environment largely because, right, gold is not supposed to be some wild some wild speculative tool. Neither is palladium, neither is silver, neither is platinum. But here we are. And you trade what is right in front of you. You trade where the opportunities are. You trade where the volatility presents itself. And that can lead to very fast short-term gains if you remained disciplined. All right, we saved the last 5 minutes of the show. We saved it. We did a great job. I'm proud. Congratulations. I hope everybody has a great day. Don's going to be up in a couple of minutes. He's going to throw some music on. I'll be back at 3 o'clock. And once again, as always, I will be back at 1 o'clock today for the next session for NVIDIA 4D. All right, everybody, take care. Hope you have a great day. I'll catch up with you soon.